All right. Morning, everybody. Happy Wednesday. Y'all hear me okay? Well, we said that more because we're going to pick up a little bit in terms of becoming more interesting, and I think this is happening now. It's been a bit slow to kind of get to this point, but we are starting to see it. So we'll go through that here today, this morning, and there is a bunch of stuff that I think could make this all very interesting very quickly here, as far as seeing some things come to fruition that underneath the surface have been brewing, and so we'll cover that here in just a second. Morning, everybody. Happy Wednesday, or Hump Day, as someone said before up there. Good to be here. We are, I think, probably the week after next, we are going to have a really cool piece of software to make this morning call a whole lot more fun. So I'm looking forward to that. I am out next week, just so you know, but then we'll be back the following week and to round off the month of February. So we're looking forward. Or actually, the week after next is, that's only the middle of the month. Never mind, I'm already jumping to the end of February is a short month, right? So anyway, thanks for being here. Good morning. Serge Berger here from the StudyTrader.com. If you're here for the first time, please make sure you give us a thumbs up, like, and you subscribe to the channel. That really helps you to be able to get alerts and updates in real time when we go live and we have new analysis, fresh charts, all that kind of stuff. So please make sure you do that and you hit the subscribe button on the YouTube page here. All right, let's go through a few things. First of all, let me start with a reminder of where the performance is year to date. If you have been following us for a while, particularly if you watched our State of the Market address the other day, and particularly if you're part of the boot camp, which we're going into day 2 today, by the way, I think Christian still has a link if anyone wants to join, if you haven't joined yet. Today is day 2 at 11 o'clock Eastern, 8 o'clock Pacific, and we're going to go through all that a bit more still. But you know that we've been talking about energy. Energy stocks are now up 15.5% year to date. You know what's not up 15.5%? What about tech? It's down 1.3%. If you look at the chart on your screen, you can start to see this divergence. So hopefully most, all of you have been following us on that research call. Not all of these calls go as expected, of course, but this was a really pivotal one to get right, and we think it's critical to understand this is, in our view, just the beginning of it all. Of the energy trade and copper and many other things in that direction, as the Max 7 stocks and the software stocks are starting to spin their wheels a bit. So that continues. Material stocks up 11.8% on the year. Again, something we've been pounding the table on for some time. Technology stocks are actually now down on a 4-month basis. Again, not something that your favorite TV personality will tell you, but factually what's taking place. Okay, so let's go a little bit deeper into all of this and see if we can make some sense of it. One of the things that I just think is critically important to understand is where trend changes occur. And again, we're going to cover this more in the boot camp here in a couple of hours. But I just want to show you what's been taking place, for example, with software stocks. This has been making the headlines. Finally, it made the TV the other day because now it's no longer something they can ignore. But for the most part, software stocks actually turned into a bearish trend. Now, this is the multi-quarter, multi-month at least kind of time frame. So the trend has actually changed. Not just the trade, but the trend has actually changed. And you can see since this background color had turned neutral, software stocks are down 20%. 20%, right? Just like that. No one sold any software stocks, certainly not on the retail side, but that's another story for another day. In fact, that's the story for the boot camp in a couple of hours. At the same time, we continue to see bearish momentum, right? So if you look at this from a momentum perspective, here too, we have bearish momentum in software stocks that started basically just at the beginning of the new year, so the first trading day of the year. You can see on January 2nd, markets open, software stocks since then are down 20%, right? So not only has the trend changed, we also have momentum that's bearish. If we take all this a step further, and you can look at stocks like Microsoft, just to give you one of the ones that everyone's long 10 times in their retirement accounts, you can see how this stock turned from a bullish trend. Again, this is a trend now, multi-quarter kind of the big thing, the big stuff, right? The most important thing. That trend ended essentially, let's call it in early January, in the stock since then is now down about 12 or something percent. Okay. Let's go through. Let's look at Palantir. This is a chart chaser name, one of the biggest ones I've ever seen, and probably one that's going to blow up a lot of people's portfolios. So here's factually what happened with Palantir, Bruce, and we talked about it yesterday extensively, in fact, and we talked about it in the boot camp as well. So for the first time since 2023, this is now the trend following model, right? Not the immediate gratification, what happens the next 2 days or the next 2 weeks, but like the actual trend following model. You will notice that it's been in a green background color ever since basically, what was that? The May of 2023. Well, look what just happened the past few days. It just turns into a neutral trend. Does that mean Serge is saying this is a crappy company, he hates the CEO and the stock's going to zero? No, like not even close. That's not what I'm saying. What I'm saying is that the trend has changed. The trend has changed from a bullish trend to a neutral trend. What does that mean? It means neutral. There's really nothing to do from an investment perspective. From a trading perspective, if that's what you're asking, I don't know your time frame, Bruce, let's have a look at it here. So PLTR, this is now the short-term stuff. This is our momentum work. And from a momentum perspective, the stock actually turned into bearish momentum it became valid on the 5th of January. Since then, the stock is now down about 9%. Of course, it had earnings the other day, so we wouldn't be holding a swing trade through earnings. Okay, so hopefully it helps you, Bruce, a little bit in terms of what we see there. So again, very important to distinguish momentum and trend. Now, very importantly, and this is something, if you're a client of ours, you've heard us talk about this now for some time. Very important is to be watching very closely what's happening in these private equity companies. Okay, now these are diversified companies, so this is going to be a little bit of an oversimplification, but nevertheless, I'd like to give you a little bit of an idea of what's going on in some of these private equity companies. Again, we've been talking about this to clients for some time, nothing new here today, but nonetheless something to keep in mind, okay? So here is one of them, one of the big ones, very respectable, great company, KKR, and you can see what's going on here just from a price action perspective. So the price action isn't really anything that's scary just as much yet, just in absolute terms, but that's why we need a bit of a smarter look at it than just drawing lines and coloring in and doodling on charts. So when we pull this up to an actual trend following model, which I'm going to give you here, you will notice that KKR, so this is Colbert Kravis, Roberts, you can see that KKR has turned, again, this is the trend following model, right? Multi-quarter, multi-year kind of thing, has turned from a bullish trend through a neutral trend and a number of days ago into a bearish trend. So if I owned this stock, I definitely would have wanted to get the hell out of this stock certainly at some point about 2 weeks ago, right? From an investment perspective. Why is this important? Like, why the hell is Serge talking about private equity companies? I don't care, only like Apple, right? Some of you guys might be thinking that. Because these private equity companies own a lot of software stocks that are betting on AI, among other things, right? So if you've noticed that your favorite software stocks got absolutely taken to the woodshed the other day and year to date, you might have to ask yourself, what other companies, private equity, to some extent, at least a decent degree, is very exposed to that entire narrative of AI software. And if someone like Anthropic comes out and starts coming up with its own software, and they own the large language model, then that really puts it turns a lot of these software stocks into a real shit show. So the spillover effect, and by the way, private equity has potential problems anyway. That's a longer discussion for another time. But I would be very, very, very careful. I would watch very closely these stocks like KKR. If we are right and we think in the second half of this year, again, this is something for the boot camp later on today, we could start to see real credit problems. Most people haven't seen credit problems because they've only been in the market for a decade or so. Then we should start to see these companies really have much more volatility and and downside, but this requires the credit cycle to turn. And I don't think it's quite turned yet. The spreads, the credit spreads, meaning the high yield or even just investment or fixed income spreads, are still very, very tight. You can also look at something like Owl, right? Blue Owl. Some of you guys know that company, right? They do a lot of lending in that kind of space, and that's not exactly the kind of chart that makes me want to go on CNBC and scream happy days, right? So I would be very, very careful with this entire space. So I've gone on sort of a 12-minute rant here, or at least a 10-minute rant. I do want to open this up for questions. I don't know if this is something, this kind of stuff you guys necessarily care about, but this is actually what ultimately turns, markets don't change on a dime, right? It takes the real sort of battleship, the real aircraft carrier takes time to turn. So that's why you see when KKR turns from bullish trend through neutral to bearish trend, that doesn't happen overnight. That typically takes at least a number of weeks, or, the calculation. That's the trend. The momentum changes much quicker, of course. So anyway, I'll leave this open to questions. I don't know if you guys have any questions on this, but I'll quickly show you what's going on with Blue Owl. It's another one of those fun names that a lot of people just, I don't even think people understand what this company does. But if you're wondering what's going on in the lending space, you will notice that this stock has this stock changed from a neutral trend into a bearish trend all the way back in May. The stock is now down 35%. Right, so this is the kind of stuff you want to watch very closely if you don't want to watch the fixed income markets very closely, because that can be a bit trickier. I fully understand that, but this is the kind of stuff that you want to watch, because these companies are essentially leveraged, exposed, whatever you want to use to the credit cycle. Right, so that's what we have there. So we've actually covered a lot. The one thing I will just want to point out quickly, because I know this is what people really care about here, is what about the S&P 500 surge? So let's talk about it. The S&P is still bullish momentum and bullish trend. It hasn't changed. If I were to pull up our trend following model and our momentum model, hasn't changed one thing. So the bullish trend and momentum in the S&P, as much as it's kind of an absolute boring shit show. I mean, the S&P has hardly moved at all since like December 11th, so 2 months ago. But it's still bullish momentum. It hasn't changed yet. Okay. Well, the 210s are the yield curve is still steepening, Bill, if that's what you're asking. But so we are of the view that the yield curve is gonna re-steepen, right? And you can look at that in many ways. I can quickly show you what this looks like. You can actually even pull it up on something like this here. So if you look at the yield curve, let's say today versus February, you can see it's re-steepened, right? So today the yield curve is the orange line, and the green line was on December 5th. Okay, so yeah. Anyway, folks, hope it helps. We'll see you guys in the boot camp. For those of you guys that are boot camp members, but today it's going to be a busy day today. Today we're giving everyone the mock portfolio through the lens of education. That's done so well, and we continue to think it's going to be a great thing going forward. Today we're going to talk about hedging, trading accounts, and investment portfolios with options and futures, and we'll continue the discussion on momentum. I do not have a view on the OpenAI IPO. It's not the kind of stuff I do. So you have to think about this. So this is a good question. John's bringing up. Can you comment on or thoughts on the OpenAI IPO? You have to think about what is an IPO. It's essentially insiders, people that have been in the company for a long time, bringing their shares to the public, right? The marketing brochure says it's to raise capital to make the company run more efficiently, and I don't disagree with that. But it's also a way to offload the risk from them to you, right? That's what an IPO actually is. So this is critical to understand. So do I care about the IPO? I'll watch it. Am I going to participate? Like, I'm going to stay 30,000 feet away from that, because what's going to happen is it might even be in hindsight, the peak of the whole AI intermediate term bubble. And when I say bubble, it's not because AI is crazy important. I use it probably every 5 minutes, quite frankly. It's insane how much I'm going to use it. It's not about that. It's about the valuations and the bubble in the markets, right? And so I would stay very, very far away from something like that. All it is the offloading of risk from insiders to through the capital markets to essentially the public, right? That's what that is. And that's why a lot of times you see peaks of things. You know, you can go back at whether it was the biggest one people remember would be the .com bubble, but you don't have to go back that far. You can look back even just a few years ago. There's always something that comes out, and then it tends to peak and basically go nowhere or crash. It's similar if a company gets added to the S&P 500. Look at companies, particularly high-flying ones. If they get added to the S&P, look what they tend to do for the next year or two. It's not pretty. Okay. So anyway, all right, folks. See you guys in bootcamp day number 2. If you haven't signed up yet, you can still do so. Christian put the link into the chat box. We will see you guys there. And we'll be back here tomorrow for Set the Market at 9 o'clock Eastern, 6 a.m. Pacific for one more Set the Market for this week here tomorrow. Take care, and we'll see you guys in the bootcamp.